You are watching the charts right now. The price is moving, your heart is pounding, and you know exactly what you should do. You wait. You wait a little longer, but that voice inside, it starts to scream. Get in now. You are going to miss it. We all know this exact moment. It is the moment that separates the traders who build generational wealth from the traders who just donate cash to the market. Listen closely. I am going to tell you a true story about a great trader named John, who had an undeniable edge. His strategy worked. He consistently held a 65% win rate. One day, John's mentor hands him a trade. It's a perfect A+ setup with the entry zone clearly marked. The mentor looks John right in the eye and says, "This trade is going to make you $10 million, but you can't touch it for 6 months. You must wait." John agrees. He takes the position. The trade is perfect and immediately starts moving up. 1 month passes, he's up $2 million. He feels like a genius, and he's already dreaming about all the new stuff he would buy. 2 months pass, the trade reverses violently. It pulls back hard. He's now only up $1.5 million. The doubt is screaming in his ear. The fear of losing that massive $500,000 profit is paralyzing him, and at this moment, he could no longer think straight. 3 months pass. The trade is a choppy, sideways mess, but still technically in profit. He's totally obsessed. He checks his phone every 5 minutes, and he couldn't even sleep. 4 months in, the trade is now only up $500,000. John panics because to him the trade is failing. So, he decided the big move is over forever. He closes the position right there, securing a $500,000 profit. A huge win, right? Except, in the days that followed, the market found its momentum again. That original A+ setup kicks in, and over the final 2 months, the asset exploded, eventually hitting his mentor's original 6-month target. The actual potential realized profit on that one trade was $10.3 million. But John walked away with $500,000. He lost $9.8 million purely because of a 2-month dip he couldn't wait through. He let impatience hijack a guaranteed winner. He broke the fundamental rule of trading, which says, don't interfere with profits. You're most likely John right now. You're likely actively leaving millions of dollars on the table because you do not understand the actual profitable power of patience in this ruthless game. This is the difference between struggling and succeeding, and this is the truth. In this video, I'm not just going to tell you to be patient. That's cliche garbage. In this video, I'm giving you 8 concrete non-cliche pillars, 8 things you must do to permanently fix your trading impatience and eliminate emotional chaos. If you're serious about transforming your trading account balance and want to finally step into the professional bracket, hit that like button and subscribe to our channel now. It's your commitment to becoming that $10 million trader. Now, let's dive into the 8 truths that change everything. 1. Ditch the 1-minute chart addiction. Stop staring at the micro movements. The 1-minute chart is where impulse and panic live. It is pure market noise. You are not trading. You are gambling on flickering pixels. Think about it like this. The 1-minute chart is a microscope. You see every bacterium, every imperfection, every frantic, tiny movement. It overwhelms you and makes every small dip look like a crash. This constant, high-frequency stimulus releases cortisol, the stress hormone, and in the process, it destroys your ability to wait. You get emotionally flooded and you jump. You need to step back. You are a sniper, not a machine gunner. You should aim for the high-value target. Move your primary analytical focus to the 4-hour or daily chart. These time frames filter out the emotional static. They only show the big story, the true trend, and the setups that actually pay. When you see a setup confirmed on the daily chart, I can tell you that the 15-minute pullback is irrelevant. Well, maybe for a better entry, but from my experience, it doesn't really matter. Patience is built on certainty, and certainty lives outside the noise. Number 2. Implement the 3 strike. You're out. Rule. You take 3 losses in a row. It stings and your ego feels the bruise. And what does the amateur do? He doubles down, chasing revenge against the market. But this is the most dangerous move of all, because it is impatient, emotional, and suicidal. But experience teaches a different path, and the solution for me in situations like this is the 3-strike rule. If you hit 3 consecutive losses, you need to stop trading immediately. You are done for the day. If you hit 3 consecutive losses, you close the charting software. And during that break, you must spend at least 3 focused hours reviewing your journal to understand the common flaw in those 3 trades. This rule is designed to force patience. It shuts down the emotional center of your brain before the damage becomes catastrophic. What you're doing is preventing revenge trading, which is the ultimate act of impatience. You are not taking a break because you lost. You are taking a break because you are committed to process over profit. You are protecting your mental capital. 3. Redefine risk as patience insurance. Most people think of risk management as the money they might lose, but this is wrong. Instead, you need to think of risk management as your patience insurance policy. When you risk a massive 5% of your account on a trade, a single loss will most likely feel like a gut punch. It is $500 lost on a $10,000 account, and your brain will panic. Your next trade will be driven by desperation to get it back, which immediately makes you impatient. However, when you only risk a cold, hard 1% of your account per trade, a loss is only $100. You still feel the loss, but it does not trigger the fear-based chase. What this does is, it allows you to breathe. It gives you the space to patiently wait for the next, higher probability setup, in the knowledge that your capital is overwhelmingly safe. The 1% rule is the ultimate act of patience. It says, I trust my edge so much, I can afford to be wrong 10 times in a row, and I will still be here, patient and ready for the 11th trade. Protect your capital, and you automatically protect your emotional stability and your patience. Number 4. Adopt the set it and forget it mindset. Let me be perfectly clear. The fastest, most effective way to destroy a good, profitable trade is to manage it in real time. So stop watching the trade. Your job finishes the moment you place the order and set the stop loss and take profit. You already did the analysis when you were calm and rational. You decided your entry, your stop loss, and your take profit. And every second you spend watching the trade is a second where your brain is generating reasons to interfere. You see a small pullback, and your mind screams, take the profit now. You are overriding your original, intelligent decision with a current, emotional, fearful one. So, trust your former, intelligent self. Set the trade parameters and physically walk away. Go live your life. Go to the gym. Talk to your partner or friends. The market does not care if you watch it. In fact, the market loves when you watch it, because that is when you panic. Your job is to execute the plan and detach from the outcome. True patience is the discipline to hold a winning trade until the market confirms your initial thesis. It is the ability to walk away and let the edge play out. Don't be like John in our story. 5. Use the opportunity cost filter. Before you enter a quick, mediocre, impulsive trade, ask yourself this brutal question. If I take this setup for a tiny gain right now, will I have the capital and the mental clarity to take the A+ setup when it appears 3 hours from now? The true answer, overwhelmingly, is no. That impulsive B-grade trade drains your capital, even if it wins, and more importantly, it drains your focus and mental bandwidth. When the A-plus setup finally arrives, the one with a 90% probability and a 1 to 5 risk to reward, you are already distracted, down a little bit, or hesitant, and you will miss the big move while you were busy chasing crumbs. Patience is the act of preserving your resources, capital, and mental energy for the truly excellent opportunities. And every low-quality trade you skip is actually a massive, non-monetary profit saved for the big win. Your most valuable trades are often the ones you don't take. Number 6. Master the art of the unsuccessful watch. You feel the powerful, irresistible urge to trade. You sit down, you open your charts, you scan the markets, you look for your high probability setup, and you find nothing. This is the moment where 99% of traders break. They force a trade. But let me introduce you to a new, non-cliché practice. The unsuccessful watch. You sit down, you diligently analyze the markets against your checklist. You look for your criteria, and then you reach the most powerful conclusion. There is no trade that meets my A-plus standard. Then, you shut down the screen. You close the app. You have done your job perfectly. You have successfully executed your analysis and determined that the highest probability action right now is doing nothing. What this does is, it trains your brain to accept an activity as a successful professional outcome. You are not bored. You are paid to wait. You are a high-level specialist, not a machine, and you only get out of the boat to hunt the biggest fish. Every time you close the screen without taking an impulsive trade, you won a significant psychological victory, and it will help you even beyond your trading business. 7. Create a trading time block. One of the sneakiest ways impatience takes over is when trading bleeds into every waking hour of your life. Suddenly, you are no longer a trader. You become a market zombie, glued to the screen, waiting for action that never comes. The antidote to this is simple but powerful. Create a trading time block. Pick a strict 60 to 90-minute window when your market is most alive. Say the opening hour of London or New York session, when volatility is sharpest and real opportunities appear. Inside this block, you are fully locked in, with no distractions. Your only job is to execute your setups with precision. Outside of this block, let the charts be off limits. That time belongs to your family, your body, your hobbies, or your study. You let the market breathe without you. And this is key. If your setup doesn't show up during your block, you don't bend the rules. You shut it down, walk away, and come back tomorrow. Over time, this routine rewires your brain. It teaches patience outside the block and aggressive focus inside the block. The anxious, all-day vigil disappears, and in its place comes the calm discipline. You regain your edge, and just as importantly, you regain your life. Number 8. Trade your plans checklist. Another very simple yet effective way to tackle impatience in trading is by using a simple, physical checklist. Before you click buy or sell, you must literally tick off every single entry criteria. Think of yourself as an airline pilot. Pilots do not take off based on a hunch or an urge. They follow a pre-flight checklist. They physically check the engine, the flaps, the fuel. And they do this every single time, even if they are experts. Why? Well, it is because the checklist separates the rational planner from the emotional executor. When you write the plan, you are calm, rational, and objective. But when you are looking at the chart, you are anxious, greedy, and impulsive. But what the checklist does is, it forces your impulsive self to obey your rational self. And if you skip one single step, if the setup is a 95% match, the trade is invalidated. You must wait for the 100% match. Patience becomes the simple, disciplined adherence to the list. The market is always here. That stock, the currency pair, and that commodity, it will be there tomorrow. But your capital, your mental clarity, and your discipline are fragile. Those are the only things you can lose forever. Remember John? He was up $500,000. He thought he was winning, but his impatience cost him over $9 million. The market did not beat him. He beat himself with his own impulsivity. You and I have been Johns in the past, but now you have the tools now. You have the anti-impatience protocol. Your only job now is to stop being a reactive gambler and start being a patient, deliberate CEO of your trading business. Your greatest edge in this entire game is not your indicator. It is your wait time. If you are ready to take the next step and really find out if you are actually trading, or are you just gambling with charts, the fastest way to find out is in this recommended video, the ultimate trading checklist. Watch it with a pen and paper in hand, and you will see exactly where you stand. Please don't forget to like, share, and subscribe. Until next time, may the trend be with you.